Welcome to Crypto Flywheel, the podcast where we spin up strategies to turn your digital efforts into unstoppable momentum. Let's get that flywheel turning. Hey, Professor X, how are you?
Well, good afternoon, Digital X. How is everything going? How was your morning today?
The morning's going really well. Just waiting for us to start our next topic.
Oh, nice. Yeah, let's get right into it. Anything in particular that you were looking to talk about that would be beneficial for our audience?
Well, this morning I was thinking about Michael Saylor and MicroStrategy, which was rebranded to Strategy earlier this year in 2025. I was just going over his strategy on obtaining BTC for his treasury. What he was doing was he was borrowing money cheaply or selling his company shares and use that money to buy as much Bitcoin as possible. His intentions is never to sell it, right? So he's expecting BTC to be valued around $200 trillion at some point. So currently he has strategized to build up over 671,000 Bitcoins, which is currently over 3% of the total supply of Bitcoin. So I was just thinking about that.
Well, I mean, wasn't Michael Saylor the CEO or chairman of MicroStrategy, and wasn't his company something to do with software? And wasn't doing very well, was it?
He started this company way back before the dot-com era, or the dot-com bust, when he had started his company, which is related to software. I think he was selling software programs. I'm not exactly sure, but I know it was related to software and technology. So during that dot-com era, I mean, his company dropped in one day over 60%. And at one point, it was down 99%, but they didn't fold. So they're still around. So looking at his investment strategies, I'm kind of skeptical on how he's amassing this BTC supply, using his company shares, selling his company shares and borrowing money to obtain it.
Yeah, I mean, I think he also kind of was completely betting on this debasing of the dollar and monetary expansion from global central banks and persistent net zero interest rates. And he I don't know, he's got some bizarre thinking. However, it's been proven to work for him thus far. But again, he's always thinking about this Bitcoin, and he kind of shifts the market in that sense, I feel like. Don't you agree? Or do you? What do you think? What are your thoughts?
Well, my issue with him obtaining BTC by leveraging debt in order to acquire BTC. So let's say if BTC goes down to 20,000 or 30,000 or 40,000, I mean, he's pretty much, from what I view, it seems like he probably would be liquidated from his positions, or he would be forced to sell, right? So in order to pay off his debt. Obtaining debt to buy an asset in terms of what he's doing, I'm not for that. But you know,
I'm saying that I think that he goes in, I feel like Saylor believes that his framing of this asset is specifically Bitcoin. I think he really is bought into the slogan of digital gold, a store of value for Bitcoin. Essentially, Bitcoin, I thought when technology came out, I thought it was meant to be a digital cash, and he's completely bought into it as a store of value. And his strategy is Bitcoin as a primary treasury reserve asset, I feel, for MicroStrategy. And that's what I think he wanted to do back in 2020 when he decided to foray into this Bitcoin asset class. No?
Yeah, I agree with you. I mean, his whole intention is to buying BTC in order for the value to go up and, as a store of value. But I'm not questioning him buying the product. I'm questioning his methods behind buying it. And if you look at Tom Lee, that promotes Ethereum, he doesn't use debt to buy Ethereum. His strategies are totally different in order to build up his Ethereum treasury, right? So I'm just questioning Michael Saylor's methods behind obtaining Bitcoin.
Yeah, well, his conviction is definitely there in the asset. So that is for sure. I mean, deliberate responses to the fiat currency debasement, you know, our US dollar, debasing that dollar, that's trending right now as it is. What else do you think we can talk about? Well, with Bitcoin, and one last point with Michael Saylor, I think our audience should do a little bit of research to Bitcoin prior to you know, if you're not already involved in it way before it hit the 60, 70,000, 80,000, 100,000 price levels. I mean, getting into it right now would be a little risky, but do your due diligence on it before foraying into purchasing Bitcoin. That's just my opinion and suggestion. So we can move on. What else can we talk about that can bring some value to our listeners?
Well, yesterday we spoke about scams, so I think it's important to also discuss cold storage wallets, ways for us to safeguard our assets, right?
Yeah, absolutely. That's a great point.
So, I mean, I'm sure. Yeah, I mean, there's so many different cold storage companies out there. We have.
Digital X, can you kind of, before we go into the different companies, and can you kind of, for our listeners to understand, what does cold storage actually mean from a layman's standpoint?
Well, the purpose of cold storage is to move your assets from traditional exchange like Coinbase, Uphold, Crypto.com, Kraken, into your ownership, meaning you're custodying your assets instead of the exchanges holding them for you. So what you want to do is you want to obtain your assets and you want to control your assets. So let's say if any of these exchanges go under, if they belly flop, what do? You're going to lose all your assets, all your earnings or all your investments that are placed in those exchanges, because there's no guidelines or regulatory frameworks that's been implemented, or you don't have like insurance like you would have at a traditional bank that's backed by FDIC. So you would completely lose your assets. So what you want to do is, if you ever do purchase any of these coins or tokens, you want to immediately move them into your cold storage wallets. Cold storage wallets are basically a drive, a sort of cloud storage drive where which is secured by you to hold these assets.
Man.
Safe.
Well, yeah. So kind of like keeping private cryptographic keys completely offline, right? It's just another layer of protection or security for your assets. It's I think the industry, they refer to it as private key, right? And you hold it offline, and it's a layer where it's much more difficult. I'm not saying that it's completely impossible to hack into, but it's gonna require a lot more layers of protection. I mean, not require. I mean, it's more protection for your assets. Correct?
Yes, it's more protection. And you're the only one that has custody over it. So you're pretty much safe from any malicious, hacking or anyone trying to obtain it. I mean, unless you tell them where it is, or unless you give them your seed words, right?
Yeah. Well, so when as you were saying initially, what are some of the examples? Like off the top of my head, I know I own a Ledger. I also own a Decent wallet, Tangent wallet, and a Trezor wallet. What are some of the other, for our listeners, what are some of the best ones, and what differentiates each from other cold store wallets? Like, is it decentralized or is it centralized? How can you go into that a little bit?
Yeah, all cold storage wallets are completely decentralized. So some of the ones that you have mentioned are great wallets. I mean, I myself have a Descent, Trezor, Ledger, Tangent. There's so many out there. EliPal is another type of wallet that you can have. There's another one that's actually a great wallet as well. It's One Key.
One key. Okay.
Yeah, One Key. So
all
these,
news to me.
Yeah, all these are great wallets. It all depends on what is your strategy behind utilizing these different wallets. Like, I'll give you an example. My Decent wallet, I break up all my assets equally into all different types of wallets. So I'm not custodying all of them in one area, right? You want to diversify, you want to safeguard, you want to make sure if something happens to that one wallet, you don't lose everything, right?
Cool.
So
Right.
it's important to have a diverse selection of wallets that you have your assets custodied in. So
Yeah.
like, and another reason why I have several different types is because I stake, I earn yield on certain coins. So some wallets allow me to do so through those wallet platforms. So I utilize those for that. And then I have a wallet where I'll just use just to sell those tokens, right? I'm just interacting with those tokens just to sell them. So
Yeah.
I'll place some of those assets in that particular wallet where I interact with the exchanges. And then I have other wallets that I utilize for staking other tokens, or
So
coins.
for our listeners, Digital X, what else can they can question us and provide some comments. We can further delve into cold storage wallets as we progress down our episodes. But what are some of the other things that we can talk about as it relates to value add for our listeners in terms of digital assets and getting into this space very comfortably with clarity and confidence?
Well, in order to get into the space, there has to be some sort of understanding behind it and some sort of interest generated from it, right? I'm sure a lot of our audience are paying attention to the news and the financial news and the regular mainstream, social media sites where they promote like meme coins to BTC to Ethereum to XRP, Solana, and you're probably trying to figure out, hey, what are these, but you don't know where to go to find that information, right? So podcasts like our Crypto Flywheel will allow you to be a little bit more familiarized in the area. I mean that's where we start. That's the beginning, right? Other than that, I believe it's the individual's interest that intrigues them to look further into the space.
Yeah, I agree with you. The interest stems from the exponential growth from, let's say, $100 you invest and that turns into $10,000. There is immediate interest there. They're like, and that was probably not planned. They got in. That's kind of how I was when I first started. I got into Ethereum before Ethereum took off. So Ethereum was at, I believe when I started, was like at $185. And the minute I got in, I had staked Ethereum initially. So when I staked it, I was getting, as the price action was going up, I was generating more liquidity tokens from the smart contract that I put my assets into. So let's say, for example, just to get into it, I was interested because I saw my Ethereum growing and I'm like, whoa, how is this happening? What is this staking bit? I just did it because I heard a YouTuber told me to put it in and I did very little. I didn't put a lot in. I put like 10% of my holdings in and then that 10% ended up turning into 3x my total. And what I had, what I invested into that smart contracts, that garners interest right away. So people are going to come in. And I guess that's what's happening. And when it's already in mainstream media, you're late, effectively, right? Don't you think?
Oh yeah. Yeah. Once they start promoting certain projects in mainstream media, it pretty much your exit liquidity for the early investors, right? So you're absolutely right in terms of, the peaking of interest comes from gain in your gains, your profitability, right?
Yeah.
So, just like that. I mean, when I first started, I started purchasing a lot of these low priced projects. It was under 1 penny, right? So when it goes up to 10 cents or 20 cents, you're probably Xing or Xing on the value that you invested. So
Yeah.
immediately you tend to that interest has peaked. So you want to find more of those projects, or you want to find out more about what's happening in the space, or what can I put more money into. I mean, it was exciting, and it still is exciting. And I think the opportunity, exactly. I think the opportunity has just started. We haven't seen anything yet with the amount of liquidity that's going to be flowing into this asset space moving forward. It's going to be is.
I agree, but I also want to add that 20x, 30x, where did that come from? That came from like projects that were touted as meme projects, like mostly when we first got in 2017, 2018, it was projects that deemed was looking very promising, and we got in sub 1 penny, and yes, it went up to like 10, 15, 20 cents, and we made 20, 30x on our money. That was great, and that was kind of what I was referring to as beginner's luck. Fast forward 2-3 more years into 2021, 2022, it started slowing down a bit more, and more of the meme projects were surfacing, if you will, right? So those projects, people, by the time it got to mainstream, it was already 1,000% or 10,000% gains. 2 3s, it was 0.0005, and then it went up to 0.0005. That's a whole, 1 0 fell off, and you're making 100x on your, 100% on your gains, right? So that era is gone. I don't believe that that's going to be available.
I mean that era may be gone in terms of like the amount of meme projects that are coming out, but I think the meme sector is very important just to bring new investors into the market. I look at it like this: the meme industry, yeah, I mean it's fun, right? It's basically a form of gambling. So I look at it in terms of this: if you go to if you're an individual that never been to a casino, and you go to a casino, first thing that catches your attention is a slot machine. Slot machines, yeah, you don't know if you're going to hit or not, but you're going to continue putting that money in, right? And what keeps you going? You put in $1, and you probably end up after 10 tries, you win $15, right?
Yeah.
So that excites you. Say, I want to make another $15. I want to go for $30. So it's just the same way I look at meme coins. Meme coins are just this. It's
slot machines of the casino.
Yeah, it's a fun little token that you can buy just to see if you can make money on it. Right?
Well, Corley, going back into doing your analogy, I think that if these tokens, these utility-based tokens that we're talking about, are probably more skilled and required the fundamentals of understanding the tokenomics, the white paper, and understanding what utility it provides, what problem it's solving, correct? Like,
yeah.
Casinos are slot machines are the memes, and poker table or the blackjack table, you need strategy. Right. So, and you need to understand how to bet and see how the cards fall, etc. So that's kind of like the comparison or analogy that you can draw. Am I wrong?
Yeah, you're right. Well, you have to get to be interested somehow, right? So getting in via the meme way, it's one strategy that I believe it's a good strategy, right? But once you get more immersed into the asset class, you tend to maneuver around different areas where you find different projects, and now you're excited about what you are learning about. Then you tend to refocus and reshift your funds into different projects, right? Because you see different utilizations behind it and different meanings behind those projects, right? So, and you see value where those projects can provide solutions for real world problems, right? Yeah. So,
well,
that's where you tend to move towards once you've been a little bit more seasoned,
experience into the asset class. Understood. Understood. Yeah. So, Digital X, I think we're up on time here. So I think we can go into a few more topics. I'd like to keep this meme as part of the cryptocurrencies going. Maybe we can address some of those based off of comments and questions. If not, we'll come up with another topic to speak to similar to meme tokens tomorrow. So do you have anything else to add there?
No, we'll wait for tomorrow then.
All right. So then the Crypto Flywheel is signing off right now. Thank you.
Thank you.